Welcome, everyone, to another edition of Loser's Lunch, our weekly exploration in excellence. We got a special guest, Kevin Pettaway, with us today. More on him in a moment. Let's get right to the markets. That was Hang 'em High from Van Halen, Diver Down. Probably one of the most maligned Van Halen albums because it was half covers. It just so happens that their Van Halen covers are better than the originals anyway. No offense to Roy Orbison, but their Pretty Woman was pretty awesome. But why hang 'em high is because we're getting hung out to dry by the Federal Reserve. Anyway, not much going on today. There was some strength overnight. I touched on that in my Mancuso Market Minute. Tomorrow, again, pretty quiet too. Wednesday, we got Fannie rolls. We've got, of course, mortgage apps. We got the big one, CPI. I don't get it. I keep saying I don't get it. All other inflation indicators, have shown moderation, but we care about CPI. So here it is. Wednesday's the big day. That'll likely determine the rest of the summer in terms of interest rates. Cleveland Fed, by the way, at 11 on that day. Thursday, producer prices. They used to come out before CPI, but anyway, which is sort of the business side of inflation, hence producer. And then, of course, jobless claims, which were up again last week. And then lastly, as we close out the week on Friday, where we roll what we call Class B or the dwarfs or 15-year for the uninitiated, we got a retail sales number. Will be interesting. And then consumer sentiment. Last week, unless you were under a rock, the jobs number came out, and the market didn't like it. We had Fed minutes, and they were somewhat hawkish, I guess. I mean, I don't even know. We're in this process of saying one thing, doing another, hearing one thing, saying another, listening about one thing and hearing another. I don't know. If you're not confused by what I just said, I am. And the Fed is threatening. I will talk about it, Mark. Thank you. But what we saw an ISM number that the headline beat a little bit, but still been moderating since the beginning of the year. So I really didn't care about the beat. And then the non-farm payroll number that showed job creation. And I still kind of question this job creation. Saw some articles over the weekend. There's a guy on Facebook that I want to get on here one of these days, Chuck Cowan. I like his market analysis because it's similar to mine. We always look behind the numbers, beyond the numbers. And I should have given you this link, Jenna, but I didn't. But it talked about challenger layoffs being up 60% year over year, 58.5 to be exact, as well as real earnings down about 3.5%. And Chuck mentioned this in his Facebook article, or I should say Facebook post. And, it just goes back to my headline on my Instagram thing is that, figures lie and liars figure. And so that's why I really always go back to eyewitness economics. What am I seeing? What am I hearing? And at the end of the day, it depends, but I think we might have a surprise on this CPI report. So, we'll see. We shall see. There is a consensus that things are slowing down. I mean, that's for sure across all industries. So ultimately, if things are slowing down, I don't know why the Fed would have to push us off that cliff, but they continue to want to do so. So to my guest, Kevin Pettaway. What's happening, my buddy?
How are you, my friend?
Just trying to navigate, the murky waters. Was talking to somebody about this earlier in on my one-on-ones this morning, and one of them I just said, I've seen it all in the last 20 34 years since 1988, 35 years. I feel like this moment in time, 8:30 a.m. Eastern on Wednesday, is like literally the most important moment that I've seen in 35 years. And the reason for it is, whether you talk about 2008 or you talk about COVID or you talk about the 98 liquidity crisis or you talk about 2002 when the market spiked and some folks got caught offside, unhedged and things of that nature. But, there always seemed to be a general consensus of where we were headed. Hey, we may be fucked, but we all know we're fucked. So, okay, who cares then? We could do something about it. Everything's great. And we all know everything's great. But here, there just seems to be the Fed, who's kind of hell-bent on killing inflation. There's inflation for some, not inflation for all. And what do I mean by that? Lumber prices have dropped like a rock. Housing prices are starting to moderate a little bit. So, I keep saying the Fed is kind of chasing yesterday's news. They're chasing ghosts. And so let's equate that. So that's why I think that Wednesday is like, when this number prints, is the number going to be aligned with what everybody is seeing? What I think is the economic reality, what this article pointed towards, which is strong employment is a lagging indicator. Okay, this Challenger layoff number historically is a predictor. What's interesting is that job report is arguably a predictor too, because when inflation is at its least, that's always been a harbinger of a recession. So to get excited about it, ultimately one could argue rates should have rallied off of it. Because, here it is. Okay, maybe this is the last good jobs number. And by the way, if you looked at it, one of the components, I was talking to, somebody about this as well, is like travel and leisure was a strong component of it. No shit. We're hiring people for bars and restaurants in June because it's the summertime, and that's kind of what people do, certainly in warm areas and beach areas and things of that nature. So it wouldn't be a surprise. Here's a question for you, given your sales background, what happens? What do you do when expectations don't meet reality, right? When you have customers that expect a certain level of service out of you that's unrealistic, or you're delivering, say, excellent service and they don't see it, or they want price and you sell value, or vice versa. What are some of the things that you do to move the needle?
Well, first, I think, the biggest component of that is setting the right expectation for you and your customer both, right? And then, if you're not delivering on what you said you would, then you have to go internally and figure out where that issue is coming from and handle it from there, and then relay that to your customer on what you've done to rectify that situation. And again, setting that right expectation is that key component, because if I set an expectation of 24 hours and I'm delivering in 72, I'm already behind the 8 ball. So I've already lost my credibility. So my credibility to that customer now is going back to my internal folks, finding out where the issue is, putting an end to that, and then going back to my customer and setting the right expectation going forward.
So you said a lot there, and it's something that we've explored on this program on many occasions. And this applies to business, sales, investing, a great many things, parenting, even. First of all, you have to have a plan, and look, and how tight that plan is up to interpretation. I myself have never been like this humongous pro forma guy, but budgeting guy, simply because I think that every, good intention potentially has a negative consequence. And, when you're not running this multi-trillion-dollar company, you turn around and say, hey, Kev, the only thing I care about is that you're going to do 10 sales this week, right? Well, oftentimes, if you're not on track to do those 10 sales, you begin to do bad things. And I don't necessarily mean like illegal things, but you cut corners, things of that nature to hit a number.
For sure.
Because oftentimes we don't make those numbers small enough. I mean, like your first goal of the day should be to wake up, then do your bed, then, get in your car or turn on your computer or whatever.
Right.
So often where we fail is we set our goals so high that when all of a sudden they become likely unattainable, we kind of shut off. So, but to have some sort of plan, and in your context, in a selling situation, it's like, okay, Mr. Customer, this is what you should be expecting. And you'd be surprised in our desperation to make a sale. How many times I've had loan officers tell borrowers they're going to close in 3 days when they can't even close legally in 7. And it's like, well, on day 4, when we're cleared to close, you have a disappointed customer because they're pissed off that it wasn't day 3. And so to your point, setting those expectations, even though it might cost you the sale, is important. That's number one. In business, having some sort of plan, even if it's as loose as, well, we're going to be in the business of doing appraisals, is a good start. Right?
Yeah, right.
But then from there, being able to adjust, and that's where I think that fluidity in business, that dance, we talk about it at EPM or Appraisal Nation of batting 350, right? And that's where I think sometimes we can get lost is, all right, I have a plan and I have a goal. And your goal is, again, do 10 units today, right? And then all of a sudden, something happens that really only makes 8 units realistic. Well, we have to be realistic to adjust and say, okay, hey, this has happened and this has happened, and we're going to have to address these things.
Right.
But 8 is a success today. We often want to avoid that failure because we didn't bat 1,000. We only batted 350, or in this example, 800 today. And there's still success in that 800. But then we sort of, don't communicate because we're afraid of the repercussions of not batting 1,000.
Absolutely. I always use the analogy of a baseball player, right? Is in our business, if we went 3 for 10 and we have a 300 average, we lose our job. If I'm a baseball player and I go 3 for 10, I'm an all-star. How do we fit that into our daily lives, right? So that's what I talk to my sales folks and operation folks about, just doing the right thing, because that even though you're 3 for 10, you're going to get a bloop hit here or there. You're going to have an infield single here or there. That's going to raise your average. And that's all you're trying to do is keep pressing and pressing and pressing, and it will eventually come. And that's what people don't do. Once they hear no 7 times, they give up.
Yeah. Yeah.
Right.
And sometimes it's a nuance, watching the Yankees this weekend, incredibly frustrated that they split the series with Boston, because really they were in a position to sweep the series, and some shoddy defense and some untimely bad pitching and really anything. It's funny how sometimes if you're removed from a situation and you got these people who are paid millions of dollars to manage this team, and then you have folks on Twitter, in their parents' basement, sometimes it seems like they actually know more. Vasquez hits a home run off a cement mixer. Next at bat, what do they go back to on an 0-2 or 1-2 count? Is he throws him another cement mixer. And it's like, and you could see it happening. It's like you're
Right.
sitting there saying, throw him a high and tight. You got that. Throw him a high and tight fastball, but we're trying to overthink it. And back he comes, doesn't break it off over the green monster. And it's like, you could see it from 1,000 miles away, but you can't see it from 10 feet away sometimes. And, we're talking about Joey Gallo. Seems to be the world's nicest guy, and I desperately, as do many fans, desperately want to see him succeed in New York. And he's just been struggling. And we never are. Well, you Met fans settle for mediocrity. That's why. But so Joey Gallo has this bad game. He strikes out 2-3 times, and he's chasing these high fastballs, right? And then finally somebody got to him, or he got to himself. Was like, dude, lay off that pitch. Well, it was either the next at bat, the next game, whatever it was. Literally the only difference in the game, because it wasn't like he was on every pitch, right? But he goes something like 1 for 3 with a home run and 2 walks, or 1 for 2 with a home run and 2 walks. And literally the only thing he did was lay off the high fastball. I'm watching it. He's still swinging through pitches. He's still taking the other pitches he was taking. But the difference between hitting in a 3-1, 2-0 count versus an 0-2 count is everything. And the difference between setting those expectations and having a customer that's giving you the benefit of the doubt rather than an unhappy customer potentially means everything. And how do we set up our businesses and our days to where our 3 for 10, because to your point, we can't have 7 pissed off customers, but what's our definition of 3 for 10? And how do we succeed on that basis? Now, what's interesting about your business, right, versus the mortgage business. So, like our viewership is split between mortgage folks, realtors, some insurance folks, and then just some other general business folks. But whether you talk about real estate or insurance, mortgages, or appraisals, those other industries tend to deal in less volume on an individual basis.
Correct.
A really successful loan officer is doing, 6, 8, 10, maybe 20 units a month. Sort of same for insurance or real estate. Could be as little as 2 or 3 if you're dealing in really high volume. You could be super successful selling $3 million houses a month. Whereas you're dealing in volume. I mean, in some of our peak months, you're talking about 14, 16,000 appraisals.
Correct.
How do you manage around that high transaction, yet that high volume, yet keep it personal, keep it relation based? Because it's easy to say, let's just one appraisal.
Right. And I think the biggest thing is the way that we are communicating to our client, which is the LO or the company, so that they can communicate a correct, direct response back to their borrower and not give them the runaround. Going back to the whole setting the expectations. If I know that an appraisal may be late, I'd rather give the bad news a day ahead of time than at the 11th hour, because these guys are already expecting this in. They have closing set. The customer may be taking off work and things like that. I'd rather give you bad news early than no news at all. And I think that's where we fail in our industry on delivering news. Again, everybody's afraid to hurt somebody's feelings versus just telling them directly, here's what's happening. We're dealing with other people. So I can only do so much to get this in or communicate to that person. But until that happens, I have to deliver you the news that I have. And I'd rather give it to you early than not at all.
I like it. Just real quick to go back to Mark's point. Mark, I don't think that the Fed's going to do 75. So they're bouncing between 50 and 75. I'm talking. They're bouncing between 50 and 75 for this month. And I really don't think they're going to get there. But the real answer is, again, Wednesday. If we have a surprise miss in CPI, it gives them some room. If the CPI comes in on the number or beats, I think it locks up 75. Yeah, I mean, look, there are a variety of different reasons why they're probably going to do 75, Mark. I mean, not the least of which is, they seem to have this historical inclination. No news leads to client. Yes, that's exactly right, Todd. They seem to have this inclination to get to where they're trying to go to create headroom for where they need to be, is the answer I'm going to give. And so they know that they're going to have to cut rates at some point in the next year. So the more they raise rates now, the easier it'll be to cut. And that's a good point, Todd. I've always felt that succinct and effective over communication, and I know that that's sort of almost oxymoronic in that, well, how can it be over communicating if you're succinct? But you don't have to be verbose in that communication. You don't have to inundate in that communication. And I dare I say we can use technology for it. I know some of the things we talked about, at Appraisal Nation is creating automation around exception reporting. That as soon as the report identifies that an appraisal has been outstanding for more than 1 minute beyond our prescribed period, boom, a communication goes out. Because I think that we tend to assume the worst as humans. And I posted something on Instagram this week about like the power of positive thinking. And so, training the mind, and athletes do this a lot. And if you have an opportunity, I'm not promoting my Instagram, but if you go to Instagram, and I think it's still in my story, just check it out. Some pretty powerful language around training the mind to think positively and how negative thinking, is so destructive. And I think I touched upon this a couple of weeks ago, where if I said to you, Kevin, the mind can't avoid thinking in the negative. So if I said to you, don't think about an elephant, all you think about is an elephant.
Oh, absolutely.
Your mind can't unsee that, so to speak.
Well, going back to Todd's point, Phil, there about the worst case thinking is one of my biggest pet peeves is, so I know it is part of a loan officer's pet peeve or a realtor's pet peeve is when we do give answers, don't give me a canned answer. Give me some substance in that answer. Whether you called the appraiser, okay, yeah, you called the appraiser. I left 4 messages. I texted him 5 times. I'm still waiting back. That's the substance I'm looking for, not just I left a message. Because at that point in time, you still tell me nothing.
Yeah. So as volume has shrunk for the industry, right? You have everyone that's been scrambling a bit. And I want to talk about non-QM in a minute, but before we get, to wrap up, but before we get to non-QM, everybody is sort of scrambling. And what made me think about non-QM was, for the mortgage folks, 2 months, 3 months, 6 months, maybe for like folks that were really out ahead 8, 12 months ago, started looking to non-QM as that sort of buoy, that life preserver when volume started to shrink. On the appraisal side, what are things that folks could be on the lookout for that, the industry or Appraisal Nation might be innovating on to make up for some of that lack of volume that we're seeing coming out of 2 boom years?
Well, I think part of it is having a full product mix, and as we get into some of these, different areas, using hybrids more for home equity loans and things of that nature. Using the Fannie Mae hybrid. It all comes down to.
Well, what's a hybrid? For those that might not know, what's a hybrid?
So a hybrid product is basically you take components of a full appraisal and it comes in a smaller package, a hybrid. So you have some that you do some interior investigation, but you're not putting all the criteria that a full appraisal is needed. It costs a little bit less. You save a couple days here and there. It's mainly used by banks or folks who are doing bridge loans and stuff of that nature to get a value, but you're not having to complete a full appraisal.
Gotcha. So just trying to figure out a way to help streamline the process. Either what I would hope is that we take some saved time and try to do more loans, for example. I'm also somewhat realistic about how business works. Isn't shifting from negative thinking best approached by first being conscious of the negative thought and next focusing on something more positive? Well, 100%, Christy.
Yeah.
And hold that thought for a sec. Keep that up there for a second. But realistically, we might just sort of use that as a method with which to do a little bit less. I'd hope that in us becoming more efficient as an industry, it just enables us to all do more volume. So, Christy, to your point, and I find myself doing this throughout the day, and especially when there's some critical thinking. The great Tom House, Dr. House, who's sort of the father of modern day pitching mechanics, my older son, Nick, had taken a bunch of lessons from him. And one of the things he talked about that he preached, and you see athletes doing it all the time, Patrick does it on the golf course all the time, is you take a deep breath, that clears the mind. You smile, and that releases chemicals in the brain that sort of give you some momentum, if you will. And then you do a positive affirmation, or you visualize the pitch, the shot, what have you. It's all about putting yourself in the right frame of mind, right? And if the world's best athletes do it, I don't know why we don't do more of that in business. In fact, when we start the day in our quarterlies, we do have a recentering where it's just, a deep breath in through the nose, out through the mouth. And we don't sort of do that full recentering, but just, Nolan Ryan would talk about that. Deep breath, smile, and say, okay, Nolan, you got this, or thinking about throwing as hard as you can, whatever it might be. Before a presentation, well, you're right about that, Todd. We don't have enough time to talk about all of that nonsense, but no one, and I've touched on that though, Todd, is no one cares about the revisions. I talked about how GDP is going to be revised 12 times. After the first 3, nobody cares. That's already yesterday's news. But before a business meeting, before a call, centering yourself, taking a deep breath, thinking those positive thoughts, thinking about the last time you had a successful sales pitch, thinking about the components of that. What did I do? What happens if somebody asks me an uncomfortable question? Being prepared for those questions. Not every sales pitch is going to be, oh, great, Clay, great to see you. Okay, I'm going to give you all my business. Is there anything else that's out on the horizon for the appraisal business or the appraisal industry other than a hybrid? So the hybrid sounds interesting. What about any technologies? Do you see more of a use of AVMs as a tool, maybe earlier in the process for folks thinking to sell a house? What about, I hate to say it, loss mitigation? We're going to get into non-QM here in a minute. Anything else that you're doing to kind of push the envelope to make up for fewer originations in 2022?
Yeah, no, I think you hit it on the head. Getting more into that loss mit servicing aspect of it is a very beneficial and crucial piece for us to do, financially, and to help out those companies. I think the biggest thing is really going to be the hybrids. As you see more people, doing bridge loans or getting home equity loans, because they're not selling their house or they're just fixing up where they live. Those are going to become more palatable for them until the market does, even though we are seeing an uptick in inventory, it's still nowhere near where we need it to be. So you still have those people with the old adjective, might as well fix up the devil I know than buy somewhere else and pay more.
Yeah, and by the way, I mean, I'll just say this, folks, and I think I touched on this last week. Either way, it's worth mentioning again, and I've had conversations about it. There's a chance here that for the first 3-6 months of this cycle, that we could be in a little bit of a Goldilocks situation. You have prices that might be easing a little bit, okay? You have rates that'll be easing a little bit, and you have a bunch of folks who just missed, right? The house was just a little bit out of reach. They got outbid. The rates went a little bit too high. The combination of all of those factors. And then you have some folks that might jump in while they can. Because I think that the consensus is that this recession is going to look different than others. And if you actually look, I looked at a data point this weekend of the last 5 or 6 recessions. Most of them did not come with a housing crisis. Housing survived the recession. And I'm going to venture to guess that this isn't going to be different. I have some concerns because of how quickly housing prices escalated, that you're going to have a bunch of people upside down, and what is that going to exactly mean? But I do think that we are in a recession, and that housing will survive that recession, particularly in the hottest markets.
Yeah, I believe that too. And don't you think that now, especially from an appraisal side, that in the beginning of this, when people were buying that house that was normally $350, they're paying $500 for, but now we've basically reset that market. So when it does cool, I don't think you're going to see it go back below that 500. You're going to be in that 450 to 550 range. So, but it's not going to go back to where it was.
Yeah, I think there are several reasons we could sort of discuss why there's been a reset. And we talked about this last week in terms of inflation. I think that there are some base prices that are up forever. What we've got to do is then say, okay, well, we're measuring this month to month or going forward a year to year. If you made money on your last house and you're going to lose a little bit of money on your new house, you're not going to just hand the keys in automatically. Are they considering lowering the barrier of entry to become an appraiser to help turn times? Any word on that?
I mean, there's no new word on it. Obviously, I must say this tongue in cheek, but it's kind of interesting that they want an appraiser to have a degree and do all this apprenticeship and things like that. But on the other hand, we can have somebody who's a gas station attendant take a test and be a LO tomorrow. So, we have to figure out a happy median to how do we get those appraisers into our market without having them do so much. And right now, part of the problem I see is that the older group of appraisers who would be the ones training these apprentices just don't want to do it. So we have to find another way to make that happen for them to get their hours in.
It seems an archaic way of doing things. And I've been talking a lot about unintended consequences lately. And we know what happened in the middle of what happened in the middle of the COVID boom is that you were having some appraisals taking 2-3 weeks, whatever it was, maybe more. And that's not good for the market either. That's not good for the consumer either. Happy medium is sort of a good point. Let's wrap up with non-QM for a minute, okay? And so, we've had 2 companies go under close the doors in the last week or so. We had at least one large warehouse bank that I'm aware of. There may have been others that have potentially put the kibosh on warehousing these loans. You have to get a pre-approval. We know the way risk works, by the way, folks. If we think that they're going to be the only warehouse bank or the 1 or 2 or 5 that may have come out, they're all going to do it because nobody wants to get picked off. Is this potentially the death of non-QM? I don't know. And I know that it's very premature to say that. I just sort of know the way these things go. I'll ask a rhetorical question because, you might have some people feel free to weigh in here if you're watching. But I'll ask you, Kev. Your ear to the ground. What are you hearing about non-QM, if anything? And is this the beginning of the end for non-QM?
No, I don't think it's the beginning of the end. I think obviously non-QM serves a purpose in our market right now. I think what you said earlier, people are just going to be more cautious on how they deliver that product from a compliance standpoint. That's where they're going to drill down, and it's going to take longer to do. It's just going to be a longer process for that to happen. But again, I think it serves a purpose in our market just because it hits another sector of folks who don't fit into a traditional FHA or conventional loan. So we do need that product out there.
So here's how I'm going to wrap this up, Kev. And Michael also would be so proud of me. I'm going to tie a pretty little bow on this thing, but he'll also be simultaneously pissed off. Credit has been on the rise. That's correct, Mark. He'll also be pissed off that I'm setting it up by saying I'm tying a bow. He would say, just tie a bow. Don't tell me you're going to tie the bow. But so we talked about expectations on this call, right? And we talked about non-QM and is this the beginning of the end? I was one of the lone voices against non-QM and have been for a while, and here's why. Not that I don't like the product. I love the product. I think it's necessary. I think that we need to provide loans for people that don't have an 800 FICO or a pretty little bow, not to be redundant on the use of that word, on their income or their assets or whatever, okay? There needs to be liquidity for beyond Fannie, Freddie, and then even Ginnie, right? But expectations. I've been saying this now for whatever, a year, 2 years. Non-QM is subprime. Wake up, okay? Might look a little different. It might not just be bad credit, but subprime means less than prime. It just doesn't mean just, hey, shitty credit. And what I didn't like about non-QM, and it's morphed a little bit to their credit, is the rates now are somewhat commensurate with the risk. We've tried as an industry to deliver conventional rates to subprime loans, to subprime borrowers. Because, and we talked about why, the other bow I'm tying here is when we set goals, right? What are the unintended consequences? Okay, we maybe do bad things to hit those goals. Well, we come up with this product that the market needs, but the market pushes back because we don't communicate right. How does the market push back? Well, we know what today's borrowers say. One of the fundamentals of me saying rates are never going to go up, and I've touched on a bunch of them throughout the course of this program, is that the consumer has more staying power than the seller does nowadays. Okay. So the consumer used to be able to reconcile that, yeah, you know what? My credit score isn't so good, or I don't, my income isn't so pretty because I have a cash business or whatever it might be, and so on and so forth. Okay. And I'm going to take my lumps. I'm going to pay 8%. I'm going to pay 10%. And this is not a forever loan. My loan officer is if I pay my bills and thus and such, and I'll get there. And, we're trying to deliver 3 and 4% interest rates to non-prime loans, and it didn't work. These loans should be charged a rate commensurate with the risk. We, as an industry, should have the intestinal fortitude to structure a business plan around the volume that we may see in the beginning because of the pushback on those rates. We, as loan officers, should be able to communicate effectively to borrowers why it is those rates are higher. That's usually how business is done. That's why I hated non-QM in its original construct. If we learn from this, and a buddy of ours who was on the program, Bill Lyons, credit to him in how he did it, he was not really chasing that lower end. And his business, has his non-QM business has done well, knock wood, as a result of it. And there you go. By the way, breaking news. Justice Department is investigating the PGA Tour over potential antitrust violations over the LIV battle. I've been talking about LIV versus PGA, and that's another group who, don't get me started on that. Terrible sales, terrible business by Jay Monahan. Yes, wow. That's another problem. I got that text way too late because we're way over, Kev. But this is where I keep talking about the tangled web of life, of sales, of business. All this stuff is congruent, right? All right, we got time. So it's sort of like Jay Monahan is running the PGA Tour, okay? This is a tour that's been around for 60, whatever it is, 50s, I think. The King and the Bear started at the 60, whatever it was, 60, 70 years the PGA Tour has been around. This, to me, is a case study in business, folks. Is you have the tradition, you have the structure, you have the reliability and the dependability of the tour. But guess what also? You have the arrogance of the tour. They stopped treating their players and their customers well years ago. LIV has exposed that, okay? And so here's what happens. Another tour comes around that has more money. Guess what? Get over it. That's business, okay? There's always a bigger fish. Look at what UWM has done in the industry. So how do you fight that? What do? They talk about Saudi. Right. Their first answer was Saudi. It's dirty money. They get all these 9/11 people to protest. And it's terrible what happened to 9/11. I mean, you talk about Mark as an example. Mark and I did a charity event for somebody that he knows that died in 9/11. As somebody who was on his way to work, living 15 minutes outside Manhattan, the club that Mark and I belonged to when you stood on the first tee. And we know people that day that were on the first tee that saw Manhattan burning. Okay. So in no way, shape, or form to trivialize what happened on 9/11. But I mean, my God, that's what you lead with? I mean, they do business with Germany, with China, with Japan, who, even the United States, who have checkered human rights, pasts. It's like you didn't have to lead with that PGA Tour. You could lead with all the things you did great. How often in business do we lead from that weakness, taking shots at our competitors? Talk about what you do right. Why it's easier to drag people down than pull yourself up. We do it with our colleagues all the time. Don't want to hear about the complaining of what thus and such isn't doing. What are you doing? What are we doing as a company to help move the needle? That's what we've always been trying to do here with the EPM and empowering people more, and EPMX and the broker summit that we have later this month that we hope Kevin and I will be there. We hope to see everybody there. So the PGA Tour makes mistake number one. They come from weakness instead of strength. Well, guess what? Live is a runaway freight train. People jump ship. Now, all of a sudden, mistake number two. Now they start to chase them. Purses go up. Jay Monahan should be fired. I don't understand how he hasn't been. He has mishandled this whole thing. I mean, just absolutely what I would have done. Right. The U.S. does a tremendous amount of business with Saudi Arabia. So what happened was folks who understand that were totally put off, by Jay. And I've had a million conversations about that. Consequently, this Live thing has some real momentum. I got another company for you, Blockbuster. Instead of knowing and recognizing the threat from Netflix, they took pot shots at them. Where's Blockbuster today? I've always argued that coming from strength as an individual and as a business is the way to go. Sometimes you have enough, sometimes you don't. If you don't, that's where you have to pivot. We talked about it.
Yep.
Let's see where this goes. I mean, the tour is absolutely, in everything that I've seen, acted in an antitrust way. Greg Norman not participating, the RNA, Greg Norman not participating in the 150th celebration. What the heck does the RNA have to do with what's going on in a petty fight between tours? It's sort of crazy. At the end of the day, folks, business is not a zero-sum game. We can all win. There's plenty of money out there. If you're losing, look inward first. That's what the tour should have done. I've been to several tour events in the last year, and I can tell you, as a customer, they're generally terrible. Augusta is the only one that gets it right. It took an hour to get out of some of these venues. The food is terrible. The price of everything is crazy. And I've asked a bunch of people that have gone to these Live events. I said, is it as good as it looked on YouTube? They said, better. Because that's what new businesses do. They have to move the needle.
Right. Well, and I think to end this up, Phil, too, everything comes full circle, right? They're building relationships or they're banking on relationships they've had. They're setting the right expectation, and they're effectively communicating.
Boom. I appreciate our relationship, Kev.
I appreciate you, my friend.
All right, everybody. Kevin Pettaway, Appraisal Nation, awesome dude. If you don't know him, get to know him. Mark's bringing a bunch of tech to EPM and Appraisal Nation. Until next time, hope to see you at our event later in the month. Catch my Mancuso. Thank you, Mark. Catch my Mancuso. Thank you, Todd. Catch my Mancuso Market Minute. El Presidente _EPM. You have Instagram, Kev?
No, I'm not the only one that does it.
You've got to get Jenna. We got to get him on there. I mean, this guy is like a beacon of light. There's nobody that I know that doesn't like Kev. That's the sort of personality that needs to be out on Instagram. We'll fire you around some content. Get it going.
We'll do.
Let's do it.
All right. Thanks, my friend. I appreciate you.
Thanks, buddy.